This is another episode of me documenting the day-to-day process that I am taking to achieve long-term consistency in the financial market. And today is a great day to do absolutely nothing. And I'll tell you exactly why I did nothing. Because it was not a one-sided day for me. It took me so long to arrive at what I thought today could do because I could frame it both ways, bullish and bearish at the same time. And if that's the case, I know it's not a high probability trading day because my best trading days are when I come to the market and it is so absolutely one-sided that I cannot frame it the other way in any kind of way. Like yesterday. Yesterday I had a 6.49R trade. Came to the market, looked at price, read how we set up in the overnight pre-market session, and I can only look to be a seller with that information. Today, not the case. Literally the exact opposite. I came in today, I'm like, okay, we have X, Y, and Z reason to be bullish, and A, B, and C reason to be bearish. Which one is it? I don't know. Literally, I could not arrive at a bias today, so I do nothing. So instead of trading today and putting risk on in a risk off environment, I use today as an opportunity to grow and practice patience, selectiveness, and discipline, and do absolutely nothing and keep the money that I made yesterday instead of trying to make something out of this session where I'm not confident in what the daily objective is. I don't know what the market's reaching for, and that's fine. It's okay. So pre-market, I'm thinking to myself, I don't know what we're going to go do. I don't know what we're going to do today. And that's totally fine. That's totally fine. There's nothing wrong with that. There's nothing wrong with doing nothing, right? Would you rather preserve your capital and keep the money that you've made recently, or try to make something out of a session like this, waste it, and give back? And end the day in frustration. End the week off in frustration. So I'll read to you how I was feeling, how I am feeling. On first look, I'm not confident in one side over the other. On one hand, price has cleared PDH, previous day high, pre-market, and created a new bearish order flow. We could be bearish. On the other hand, this could be the counter market maker sell model that rebalances previous day range and pushes for a new all-time high. Now, I will note going into today, I read the bearish bias and I read the potential for us to go lower because we opened so high in a premium and we kept having an overextension of the move that the market made. But because of the trade that I took yesterday, and it was a really, really nice short, I don't want to let that persuade or influence the way that I think about the market today. So I looked at the setup and I was like, okay, you know what? We could go lower today, but am I just thinking that we could go lower because I caught a really nice short yesterday and now I just want to sell the market again, even though we're at all-time highs? The market has made a new range. So I'm kind of thinking about that. I'm kind of thinking about how yesterday's trade could potentially be influencing the way that I'm looking at the market today in a negative way, just influencing me to be bearish because I caught a really nice short yesterday, even though we're at the all-time high. And so that's why I kind of leaned away from the bearish idea. Now I note that when I frame a bias around the fact that we're simply at the all-time high, therefore I'm going to be a buyer, that tends to lead to incorrect biases, and I miss the days like this where we have a really nice move that's counter to the daily time frame. So higher time frame narrative that I mentioned today, we've proven discount sensitivity off the daily change in the state of delivery and made a new impulse swing. But what's left behind is pretty smooth and doesn't leave behind anything solid. So what I mean by that is if we look inside of the previous day range, where this is yesterday's low, this is yesterday's high. If we look inside of this, there's really nothing solid in there for the market to grab onto and climb higher, is there? Not really. This is the range that we made yesterday going into yesterday's settlement. And then this is the range that we made today in the overnight session right from Asia. Now, if we're looking back in this swing, and we opened here, right? So we basically already covered, let me get this out of the way. So we basically already covered all of this ground, so that can kind of be disregarded. That's already retraced over. We've already overlapped this price action right here. But if we look at the remainder of that swing, is there really anything solid in there for the market to grab onto and climb higher? Do we see any solid discount arrays? Do we see any solid fair value gaps? Do we see any breakers? Do we see any bullish order blocks that look solid, that look of high probability that the market could potentially bounce off of? No, not really. So when the market tends to overlap the previous day range, it's because of this kind of setup that we have right here, where if you look back into previous day range, there's nothing solid for the market to grab onto. And that's the simple way that I think of it. So that's what I mean by that. It doesn't leave anything behind solid. And as the market moves away from the obvious 4-hour buy side and melt sell side efficiency, I feel it may want to gravitate back towards that. But we're at the all-time high and they could just keep sending it higher. See, when you frame a bias off of simply we're at the all-time high, so it could probably just go higher. tends to lead to incorrect biases in my case. From my experience, that's where I tend to go wrong. At the same time, I'm noting the potential for price to be on the sell side of the curve based on what's happened pre-market, but there's 1 hour BISIs and 4H BISI that it may still respect. So on my sell setups, for the protraction sell setup that I have, the playbook that I have, protraction sell, we have manipulation move in the overnight session, right, where the market trades in the opposite direction of the real move of the day, builds the high of day, and then it starts to build new premium arrays, indicating that we've transitioned from the buy side of the curve to now the sell side of the curve, like this, right? If I draw this out for you real quick. So the fact that we built new premium arrays in the overnight session, or pre-market session in this case, the high day was formed at 6 o'clock, maybe potentially indicating that we are no longer on the buy side of the curve, we're on the sell side of the curve. And when this happens, typically what the market does is it will reject the fresh premium array that it's formed in the pre-market or overnight session, reject that and go lower, and that's what we see here, and that's what we see from my playbook, protraction sell. So I added this to that example, even though the timing of that move happened afternoon, and I don't trade afternoon at all. My max time that I'm going to be behind the screens is 11 o'clock Eastern Standard Time. All these moves happen at 9:30, but if we scroll over to entry criteria, what this setup tends to do is reject a fresh 1 hour / 15-minute PD array, right? And the criteria for this, how it sets up, is we're clearly on the sell side of the curve, now going lower because we're building new bearish order flow. We're building new premium arrays. So if I just pull up one of these examples, you're going to see that from the pre-market overnight session, we have built new premium arrays. In this case, we have this, I think it's on the 15-minute order block there that the market rejects. We've clearly formed an intermediate term high. We've rejected this premium array on the left side of the curve. Intermediate term high in the heart of London. That's potentially going to be the low day. We have a smooth edge below. So looking back inside the previous day range, nothing really strong for the market to grab onto, right? Now in this case, the daily time frame is bearish. In the example that we had today, it was bullish, but the same principles still stay the same. For example, in this example, we see transition from the buy side of the curve to sell side of the curve, right? The market rejects the fresh premium array there. So that's just one characteristic of how this day tends to play out, this playbook tends to play out, is it rejects the fresh premium array that is formed. Now that price is on the sell side of the curve. In this case, we see it rejects that inversion fair value gap, as well as that gap right there. Let's go to this example. You guys get the idea. Fresh 15-minute CIVI that it rejects and trades lower. On the 1 hour, we have a fresh 1 hour gap there, right? So you get the idea. So when the market forms new premium arrays, I'm thinking we could potentially be on the sell side of the curve. We could potentially be going lower. But look at my trade plan. Well, let's read market criteria first. This is correlated with protraction sell and opening range gap bear trap at the same time. I can't tell which one to use. If the daily is bullish and we're at all-time highs, I believe it makes sense to go with the one that is aligned with the daily chart, but we're also very high in a premium and have built new premium arrays, so I am unsure. This is literally a couple of minutes before the market open. Now, usually I have everything said and done in my pre-market approach at least 5 minutes before the open. So by 9:25, I'm typically done with doing this whole process and then marking my annotations that I see on the chart. In this case, it was literally 9:28 by the time that I finished this, and I was done with it. So let's read what I was thinking first. I'm leaning bullish since my bearish premium gap setup played out yesterday, which typically sets up the next up move. We've also built new market structure overnight, and there's discount arrays for the market to grab onto. What I was looking at the hourly were these gaps right here, right? But we basically already traded down into all those going into the open. But if we look in this area of price right here that I mentioned, where before the open, right, we basically already overlapped this entire swing. But if we look at what's left behind underneath that, what do we see? Like in this shaded box right here, what is there? What is the market going to grab onto in this case and climb higher? We don't really see anything. We just see a lot of lows. Low here, low here, low here, low there. So if we look on the 15-minute and zoom in on those details, we can see, yeah, I mean, there's nothing really solid in there for the market to grab onto, right? And then if we look at the 4 hour, what do we have? This is what really kind of made me lean bearish on the day and what I really struggled with. Because I'm noting this open, obvious inefficiency. We're bullish. We're on the daily time frame. We're at all-time highs. Typically, the market will form a really large imbalance on the 4-hour time frame like this, run away from it, but they come back to it, rebalance that, and then that sets up the next move higher. So when we're opening really, really high on the day right here, I'm thinking two things could either play out. Number one, we trade into the 4-hour gap here, but we form a really large discount wick, but still close inside of that gap, indicating respect of it. Or we run through it like this, and the market wants to gravitate towards this. So there are so many different scenarios I was running out in my mind, and I could name a bunch of different scenarios for it to be bullish and bearish. Therefore, it's not a high probability trading day, right? So I'm watching for price to grab onto the 1-hour BISI or potentially make a new low a day and fail around 10:30 or after the 10 o'clock high impact driver comes out. We did have that high impact driver at 10 o'clock. ISM services. This is extremely low probability day for me. I want to be risk adverse, meaning I don't want to be risk on at all because I don't even know what the fuck we're going to do today. So now I'm leaning bearish, and this is literally 3 minutes before the open. Now I'm leaning bearish because how the market came off the pre-market low, coming back inside the range with smooth lows below. I think we are clearly on the sell side of the curve, reaching for that 4-hour BISI and new discount array. So I want to. This is a typo right here. So I want the 5-minute BPR to continue to keep the smooth highs above isolated and see price reject the 1-hour inversion fair value gap on the left side of the curve. So my daily objectives, I'm aiming for Asia low and previous daily low beyond that. So I do end up getting the daily objective correct, right? And I do end up framing the right bias, but this is literally 3 minutes before the market opens, and I'm still not 100% confident that this idea is going to play out. So sure, I formed the correct bias, but I'm so indecisive on the day overall that I'm just not going to do anything. Literally, I'm not going to do anything at all. So instead of trading anything at all today, I use it as an opportunity to be selective and practice patience and discipline, especially after such a large winning day yesterday. You know, I don't want to go in here and do something stupid and give back any portion of that just to do something, just to want to do something. I'm not confident in this trade idea at all. It's Friday. It's the end of the week. Why not just go into the weekend up, unscathed, undamaged, and just finish out the week? So last second, you see that I noted that I want to see the market drop into this 4-hour gap, previous daily low. Previous daily low is also the high of the daily BISI. It's also the daily change in the state of delivery. So now we have 3 reasons for the market to want to draw back down here. So that's a strong probability draw. The same thing that I used yesterday. Yesterday we had the daily CISD. I used that level as a draw yesterday, and it came back to it today. Now today, that daily CISD is also a daily BISI. Daily BISI high if we go to the daily time frame. That low right there is going to be this level right here. It's also previous daily low that forms the high of that daily BISI. So strong reason for the market to want to draw back there. Super large open obvious gap on the 4-hour. I'm thinking we're going to come back down here. Reasons I was not confident in being bearish was because I thought the sell yesterday was influencing me being a bearish today, and we were simply at all-time highs. Typically, like I said earlier, when we're at all-time highs, the only reason that I frame a bearish bias is because we're at all-time highs. It doesn't lead to a good session, does it? No, not at all. So now intraday, if I show you my notes intraday, live trading check-ins with what we've done in the first 5 minutes, this is not looking bullish to me. So clearly right then and there, I'm saying this is not bullish, but I'm not confident to put risk behind anything really. Even if I was bullish, I still would not buy this. Why am I saying that? At 9:35, why am I saying that? Because at 9:35, I'm noticing the first thing that we do by 9:35, the first thing that we do is we trade up. There's that 1-hour gap that I'm looking for the market to reject. We color outside the lines on the 1 minute. So that's not what I want to see. It's not a good sign of indication respect of that premium array, but it does end up sending us lower, although we color way outside the lines of it. I'm noting how we left these smooth lows pre-market, a really clean, nice, smooth edge. Typically, we fade levels in price like this. So I'm annotating that. Pull up the recording. There's nothing exciting to show from the recording today. No execution's done, but you can see I have this annotated smooth sell side, and I'm making note of that pre-market before we even open. Right? Making that annotation. Leave that level intact. So we get a close below that 1-hour gap on the 5 minute. Got to get my annotations in order here. And for that reason, I am not looking to be bullish. Because number one, we're closing below the 1-hour SIBI. And number two, we have a smooth sell side edge below. There is nothing in here that tells me I should be confident in buying this at all. So even if I was bullish, I still wouldn't buy it. Then 942, we have large displacement lower, but this seems like one of those days to just overlap that. So at this point in time at 942, we have this really large displacement lower, and I'm bearish, right? Barely switched my bias to be bearish in the last 3 minutes before the market opened. We have this huge displacement lower, but I'm not even going to sell this. Why am I not going to sell it? Because look at the condition. Look how we opened. Look how the previous candles, look how each candle overlaps the previous candle's range. That is indicative of high resistance conditions. I'm not extremely confident in my bias today at all. I'm an indecisive. We have that 10 o'clock driver coming up, so I'm trading before then. It's Friday. A lot of reasons for the market to do things like this really, really sloppy back and forth overlapping price action, and then just boom, sudden move out of nowhere, which is basically what we did in noon. Boom, sudden move out of nowhere. So it's just a really manipulative, slow, high resistance condition, and I'm not selling this short at all because I'm noting how we barely went one tick above that candle's high, so I'm not really confident that that is going to be the high right then and there. And seeing how we just dropped down and then slowly meandered our way back in at 942, that's the formation of this gap. I'm not thinking that this is going to send the market lower because of the condition. I'm reading the market, feeling the market, noting how each candle is overlapping the previous candle's range. We're in a high resistance condition. We have that 10 o'clock driver coming up. It's Friday. I'm not interested in selling it. I need to see some more information, some more conviction. Though I know that the market's probably going to reach for Asia low and levels beyond that, which it ended up doing, I just was not confident in that. So at 9:55 or 9:47, this condition is nasty. Anyone who thought first presentation short just got fucked. This is a risk-off condition. I'm using it as an opportunity to practice patience, selectiveness, and discipline. This is a session to train the ability to sit still and do nothing. So I'm literally having my Top Step X platform open right next to me, looking at these shit conditions, and intentionally making the decision to not do anything. I'm using this as an opportunity to practice patience, discipline, and selectiveness, and just sitting still, just doing nothing. Because I know it's a bad condition. I know it's a day I should be risk off. I'm not going to do anything at all. So with these consecutive runs on buy side that fail with speed, distance, and magnitude, to me this looks like it's eventually going to give up the ghost and break lower down out of the opening range. And I'm saying that at 9:55. So even though the condition is extremely bad and I'm risk off, I'm still sitting here. I'm still tape rating. I'm still getting experience. And at 9:55, when the market does this, I'm thinking we're probably going to break lower out of the opening range here, because we keep tapping these highs and then boom, sudden speed, distance, and magnitude lower. And the following candle breaks lower like this. I'm annotating these things, just tape reading. I'm just tape reading, straight up. I'm just tape reading. If we look at the annotations that I'm making, right? Annotating a new PD array that ICT revealed recently, just seeing how the market responds around that. Just setting up a little trade example for what I would take if I were to take anything today, if I was confident in the market going one direction over the other. I'm just noting that it needs to drop aggressively from here because I'm noting some immediate rebalance. Then this becomes a bearish order block, testing the pre-market low. So I need to see the market reject this. I do not want to see it come back inside the range here. I don't want to see it continue to make this high resistance back and forth overlapping condition, meaning I don't want to see us drop lower and then immediately overlap that range, come back inside the range. I want to see it get really smooth, really liquid here, and just move lower with ease, with aggression, with speed. And it does that for a bit, and then we have the 10 o'clock driver, and it's hitting first partial there. I'm just putting on a little demo trade here, selling that gap, never get filled on it. So, I mean, I'm just tape reading, right? Just building more experience. And eventually the market reverses from Asia low there. And I had this predicament, which I won't hide from you guys. I will show you guys everything. But I thought that this gap was a really, really nice, obvious sell, because I thought for sure that the market had broke lower from that opening range. It was going to get really low resistance and become liquid and dive right for this daily gap down here. So I was kind of feeling a mental tug of war, because on one hand, I saw this gap as a really nice, clean, obvious sell, but on the other hand, I know this is a risk-off condition. I know that I should do absolutely nothing today, because look at the conditions. Extremely high resistance, unfavorable condition. It's Friday. I had a really nice day yesterday. I don't want to get back any of that. So at 10:05, I say I absolutely know we're going for PDL and all the other levels, but I cannot bring myself to sell the obvious gap. By obvious gap, I mean this right here, the one that we formed on 10 o'clock as soon as that driver came out. I know that price is going to reject as a result of my cowardness. And see, I'm just being really, really hard on myself. I get to watch the trade play out and think about how I could have made. Think about what I could have made had I been bold enough to just put risk on. I just can't bring myself to do it out of fear, knowing today is a risk-off day for me. So If you've been keeping up with me, you know that I'm trying to build resilience to loss, and I'm trying to become less. I'm trying to remove that fear of putting risk on in the marketplace. So here, I feel that fear, like this trade idea just does not sit well with me at all because of the condition. And I know that I should be risk off, but I'm trying to condition myself to just get comfortable with putting risk on and stop being scared of executing the setups that I do see, the setups that are present right in front of my face. But I know this condition is risk off, so I don't feel good about the idea at all, and I end up doing nothing, which was good because that would have been a losing trade. I would have lost some equity going into the weekend had I tried this trade right here. In a low resistance condition, this would have been a good setup. That's not the case today. We have an extremely high resistance manipulative condition where it's just making these large swings out of nowhere for no reason, really. No reason at all. It doesn't really make sense. Can't really put a rhyme and a reason behind it when it just rolls over like this, right? For me, at least. Maybe some of you had a good trading day today, but for me, and definitely a risk-off condition, I'm not really comfortable with doing anything at all. So I did prevent myself from taking a loss there, knowing that it's a risk-off day for me, but I was a bit hard on myself, trying to condition myself to put risk on. And then eventually 10:15, this is when I kind of felt the urge to take a trade, but I couldn't do it. And then finally at 10:15, calling it a week here, I don't have confidence in the daily objective, and the condition is unfavorable, a recipe for destruction, 100%. Because after the market starts to meander around down here, now I'm thinking, okay, well, we could play along with that bullish idea that I had in my pre-market plan, which is why you never come to the market with two ideas, only one idea. Come to the market with one idea. You're confident in either lower prices or higher prices. That's it. And eventually, if you repeat the process of coming to the market, framing a bias that is one directional and just sticking with that and following through with that plan thoroughly, then you can begin to go back at the end of the day and figure out, okay, did I get it right? Okay, why was that right? The more that you realize what you're doing right and what you're doing wrong, you're able to build a process of how you approach the market. Then that's applicable to future sessions. And then eventually over time, you get better and better at bias, and you're consistently compounding a process that makes sense for you on how you approach the market. And things make sense. This is what I've done. This is why my bias accuracy has gone up a lot. Today was an extremely difficult read for me because, it just didn't really make any sense for me. And that's fine. I don't have to get it right all the time. Just a few times out of the month do I have to catch a solid trade. That's it. Like yesterday. Yesterday paid really, really well. So now I'm simply waiting for the next day to come around where I'm looking at it and I'm like, okay, we are going lower today, and there's no way that I can frame this. We're going higher. That's it. But you got to be patient. You got to be selective in waiting for those trading days and prevent yourself from incurring a lot of drawdown in between the time that it takes for a day like that to set up. So it's just preventing yourself from doing harm in the meantime and waiting for those really high probability days to set up, because there's only going to be like 3 to 4 really solid days in a trading month. And if we look at the economic calendar, you could schedule a trading around the economic calendar because you know what days are going to be high probability and low probability. Like next week is going to be challenging. I can guarantee you that next week is going to be hard because it's CPI and PPI. We have no drivers before on Monday and Tuesday of CPI and PPI. I hate when we have CPI all the way late in the week on Thursday because the condition before then, it's going to be absolutely brutal. So get ready for that. The condition next week is going to be difficult Monday, Tuesday, and Wednesday, so I'm not even going to trade Monday. I may show up Tuesday and see if something presents itself. Wednesday, we're going to have that injection of volatility on PPI. Hopefully that's enough to provide something worth trading intraday on Wednesday. But for the most part, the market's probably just going to be very still and very quiet before CPI comes out. And then finally on... Oh shit, I'm looking at last month. Ignore everything I just said. Okay, here we go. I was looking at September 2025, but that's the breakdown for when we have CPI on Thursday. That's what the market tends to do. But either way, Monday we have no news driver next week. Monday, Tuesday, Wednesday probably going to be asked. We have FOMC meeting on 2 o'clock. Usually when that is the case, the market is not good in the morning session. It's waiting for that 2 o'clock driver. And then we have NFP. If it does come out, I don't know if the government will still be shut down or not, but who knows. Bank holiday on the 13th. The day after a bank holiday is usually pretty unfavorable. CPI, PPI, okay, that might not be terrible. Then we have 8:30 unemployment claims as usual. 3 consecutive days with no news driver, guarantee that's going to be flat. And then finally on Monday, this week looks like it'll be pretty good. We have FOMC and then GDP right after FOMC. GDP, PCE, I love to trade those days. Those are very clean, offer very clean, very easy setups, but it's definitely more risk on environment because there's going to be a lot of volatility. So with that breakdown, that's going to be the end of this video. If you watch the end, I appreciate you for sticking around. Hopefully I can provide some value. And so I'll talk to you next Tuesday, Monday, maybe. Good luck and good trading.